Welcome to today's webinar, courtesy of the Kentucky Small Business Development Center right here in Louisville. We're all about hooking you up with free, super secret business coaching and training services. It doesn't matter if you're just dipping your toes in or gearing up for a big expansion. We've got the goods, the tools, and the know-how to help you win. To get the scoop, cruise on over to LouisvilleSmallBusiness.com or hit us up at 502-977-5800. Big thanks for tuning in to today's webinar. Feel free to drop your questions or chat it up with our speaker using the chat feature. Let's dive in.
Hey, welcome everybody. Good to see everybody. I'm Dave Beck. I'm the director here at the Louisville Small Business Development Center. And as always, I'm joined with my good friend, co-worker, Janet Flaw. Hello, Janet.
Hi, Dave. Welcome to Derby Festival. I should have changed the photo on the front end of that just to put some fireworks or some of the drones up there from the weekend.
Yeah.
So should have done that.
That's right. So if you're not from Louisville, big weekend last weekend, a lot of stuff going on. And these next 2 weeks are just party central every day. So so I'm glad you guys have joined us today. And as always, if you guys, just to make sure that you can hear and see us well, if you go to the bottom of your screen, you should see the toolbar there, and there you'll find the chat feature. And if you don't see a toolbar, just hover over it. It should pop up, and then click on the chat feature, and just say hello, that you can hear me, and actually tell me where you're joining from, because I really get a big kick out of seeing where people are sitting and watching from. So I do appreciate everyone popping in and spending their an hour or so with us this afternoon. So there's Kelly. Hey, Kelly. Cassandra from Marina Del Rey, California. Gee whiz, how are you? Thanks for joining. Jessica from Louisville. Janet she lives in Sellersburg, so hello. Robert, Corbin, Kentucky. That's Kelly. Nicole from Louisville, Nikki from Radcliffe. Amanda from Eubank, Kentucky. Not sure where that is. Why don't you let us know where that is? What's that near? How would we find you? Stephanie. Hi, Stephanie. Lisa. Nice to see you. Leanne. Anna. Amanda. These are Somerset and Lexington on Route 27. Now, Route 27 is a cool little road there. I've been down that way. Well, thanks for joining. I appreciate that. Well, I really appreciate everyone joining today. Thanks for letting me know where you're running around or joining from today, because I just get a big kick out of that. So it looks like our winner today is Marina Del Rey, California. So thanks for joining. I don't know how you find us, but thanks for doing that. It's great. So when you signed up for this, one of our other coaches here at the LSBVC was going to do a Tiffany, but something happened to her. So I'm going to step in and do the best I can. So, but we are talking today, and we have been for the whole month of April, about financing your business, finding funds for your business, what it takes to do it. And so this is the last piece of that 4-part series, is where to find the money and how to structure it and things. So I'm going to share my screen here, and hopefully we'll just get going here. And as I go through this, if you have any questions or comments, just put it in the chat, and I will get to it either during or after the presentation, whatever it takes. So there we go. Janet, are we good?
Yeah, looks good.
Okay. All right. So as I always mention, we are generally technologically challenged. So you guys out there in the internet space, if something pops up that screws things up, just put it in the chat, and so we can kind of fix it on our end. So, all right. Today we're going to look at what are our funding options for a business. Where can we find some money for the business? This is probably the biggest question we get a lot, and we get this almost every day. How do we fund your business? So press this button here and here. Okay. There we go. That's me, Dave Etkin. Been the director here for a while. If you guys need any assistance or need to talk to me or any of the other coaches, you can do so. Just go to our website, louisvillesmallbusiness.com, and up at the top, you'll see a little tab that says Coach Connect. Click on that. You can see all of us and see a little bit about our skill sets. There'll be a link to set up a meeting, a Zoom meeting, and you don't have to talk to anybody. You can see our calendars. You can pick a day and time that works for you, and just get that set up, and we will be there waiting for you to pop on. So here's our agenda today. We're going to talk a little bit about the overview, the introduction to funding that's available, the types of funding options, how to qualify for funding, some pros and cons of different fundings, and then I'll hopefully have some time left over where we can answer all your questions or comments. This is probably the best part of any presentation because you can share ideas and other things that you've learned in the chat too, and so everybody can be part of the conversation, and we can all learn from each other. So please do that. When you think about funding your business, it's almost like an evolutionary chain or food chain. You always have to start at the bottom, and really the very bottom of any funding is yourself. Your personal assets, personal money, or even using some business credit cards. Friends and family, if you have people you can hit up, this is where I would say 80 to 95% of all businesses have to start here. Next up from that is investors, venture capital and angel investors, and we won't go into this too much, but I just want to say at this juncture that these type of investors are interested in a specific type of business. They're looking for businesses that will scale and grow to monumental portions very quickly, because when they put money in a business, the only way they get money back out of it is when that business is sold. So they basically want to help build this business up and then sell it at some point. So if your vision of your business is, for example, you want to put this business together so you can pass it on to your children so they can earn a living too, then you're not an investable business. That's not the mindset. The mindset is to, within 3 to 7 years, we're going to sell this company to somebody else and get paid, and then walk away. The next, we'll talk about grants here in a little bit of detail. You also, personal savings, your home equity. Home equity is a great way to get money for your business. If you do own a home and you have equity in it, there's a home equity line of credit that people look for. Equipment financing is great. If you need to buy equipment, there are companies that will finance that or do what's called a capital lease for you, where you actually lease the equipment. But since we're pointing this out, one message here is like, for each little piece of your business, there is most likely a company that is willing to finance you based on that little piece. So just going to a bank alone that might not be totally necessary. So just a general bank loan, business loan, SBA loans, we'll talk about that. Some CDFIs, community development finance institutions. That's another sort of flavor of along the lines of the SBA. We will talk about grants, crowdfunding, credit unions, and then lastly, we won't talk about this, but I'm going to talk about this right now, is this merchant cash advances. Let's see, I'm right in the way of that from that screen. There we go. Merchant cash advance. And if you own a restaurant or some sort of retail, you probably get hit up with this opportunity a lot. And I'm just going to talk about this just for a minute here, because this is a tough kind of financing, but it is so easy to get into. I mean, they will bend over backwards to give you almost as much money as you want. And this is where a company, sometimes it's even like Shopify or Square, they'll lend you money based on your sales. And then each week they'll take out some percentage of your sales to pay this loan back. And the repayment period is pretty short, maybe 12 to 18 months. So it sounds really good in the beginning, because you know, let's say you have a cash emergency and you need money fast. I mean, you can almost get this within the same day as you apply. But it's been my experience that when you do the math, the money is really expensive. When I say expensive money, I mean like what you have to pay for it is really tough. So when you borrow from a bank, the cost of that money might be, you know, 6, 8, maybe 10% a year. But if you do the calculation for this merchant cash advance, it could be between 30 and 50%. And plus they take out their payments weekly or whatever the deal is. Sometimes it's daily. And so in essence, that you sell something, you sell one of your products for $1, for example, then maybe 15 or 20 cents of that, or 15, 20%, you don't get. You know, the cash advance company takes that, you know, right away from the sale. So it's hard to cash flow these things, and it can really, especially if you're in a cash emergency and you need cash fast, you take advantage of this, it could make things worse when they start sucking this money out of your cash. So I'm just saying it's not, you know, works for some people, but I'm just saying be very careful here. Just be very, very careful. All right, the most common ways that people finance their businesses, loans and grants. And there's some serious differences that we'll need to talk about. And again, if you have any questions or comments, just put them in the chat here. I can see the chat. We're all in this together. Let's work together and we'll share things as we go along. Hey, Michaela. So there isn't a day that doesn't go by when we don't have someone get a hold of us and say they want or need a grant, and they need one today. So let's just talk about that. So what is a grant? It's basically, you know, money that's awarded to a business, generally for a specific purpose. You know, back during the big, you know, when COVID was really hot and shutting everything down, you know, the purpose of those grants was nothing but survival. So there wasn't a lot of strings attached to that. But now that emergency is over, often, you know, that's not the case anymore. So the good news about grants, it doesn't have to be paid back, but they're not just, you know, any funder's not going to give you money just because you say you need money. They're going to want something. They want you to do certain things, and you have to really understand whatever that criteria is. Grants come from all kinds of different ways, from governments, you know, trusts, corporations, nonprofits, sometimes even banks. So, I mean, there is just a ton of them, you know, out there. Sometimes not. It's just like a feast or famine sort of thing. But here's the bottom line that we tell people is like, there's very few grants that are available for small businesses. It just isn't there. And then when you do, let's say for whatever, there is a little grant or something available, there is a lot of strings attached to them. They want certain things done. You know, they might have to, you know, open up your business in a certain area, which may not be a great area. They want you to go there, or, you know, do certain things or produce certain things. Often it is, you know, the most grants that are available are for, let's see, hey, Cassandra, Cassandra says she got a packaging grant for her small business. So put in the chat, Cassandra, where you got that. That's a great little resource for everybody. Kind of share that little nugget there. I think everybody would appreciate that. The other thing is often grants have what's called a clawback provision, where if you don't, you know, fulfill what you've agreed to get this money, they can take that money back, you know, require you to pay it back. So understand that. Also, fulfilling the conditions of the grant may hamper your core operation of your business. I've worked with several nonprofits that this was the case, where their core mission was something and they needed funding, they got a grant, and the grant required them to do other things. And so that took a lot of time and resources away from their core purpose, and it caused some real problem. You want to do some research, because again, these grants pop up all the time. They pop up quickly. And honestly, it is like the Hunger Games. When they come up, everybody, jumps in there. So do your research, put some alerts on your computer, so when things pop up like it. Here's some websites. We'll send you these slides later on, as well as the recording. But you can go to these websites and get set up, see what's going on, that you can, find some of these things. So, but again, when these things pop up, it's just like the Hunger Games. Most of the grants that you'll see are for research purposes, for new drugs or cancer, this or that or whatever. So, but be prepared. Have an alert on Google, on your search browser. I mean, that's gold, and that's a great way to just keep things fresh for on top of mind there. So what are some of the good things about a grant? Well, oh yeah, thank you, Janet. Thank you, Janet. Thank you, Janet. If you find a grant opportunity and you have to pay money to apply for the grant, that's a scam. There's just no two ways about it. Often you'll see a pop-up. This is something else I've seen several times about grants. You'll come to a website and they'll say, we can get you a grant. You can either go to grants.gov or you can click here. And that click here is basically clickbait. They'll get you to suck in. They're trying to get you to pay them something, and you will get nothing in return. You'll get no help, or just maybe I don't know, a list or something. It's just no help. So walk away from that. Some grants, come with additional resources, especially some incubators and things like that. You can get training, mentorship, some peer-to-peer networks, which are great. And like I mentioned before, grants are really often just for a specific purpose, like research or different community initiatives. The cons of grants, they are so competitive. Even for small grants, like a couple $1,000 or $5,000, they could get hundreds or thousands of applicants. So again, like I said, it is just like the Hunger Games. So may the odds ever be in your favor. And there is compliance requirements. You might have to report things or do certain things. Some grants that I've come across, have been involved in, you have to do financial reporting to these guys, or you have to take their class and sit through 12 months of some sort of class, or before you can even apply for the grant. So just know what you're getting into. All right. Next, let's move on to the loans. And this is where most businesses get started, that they use a loan to fund their business. So what is a loan? I think everybody understands this. A loan is just a tranche of money, but it needs to be paid back with some strings attached as far as interest. You have to pay for the money, generally with a bank or some other financial institution. It can be used for a ton of different uses, from expenses, working capital, buying assets, anything like that. Here's some examples of uses, starting and expanding a business, purchasing equipment, hiring employees, different operating costs, or marketing. So there's various different kinds of business loans. There's a ton of them. The big three are term loans. Those are just standard loans. I think most people have been involved in something like that. Lines of credit, we'll talk a little bit about that. And then the SBA has quite a few loan programs we'll look at. So term loans are basically where you receive a lump of money and you agree to repay that over a specified period of time. So there's two things to be aware of when you apply for a loan is what's called term and rate. So rate is that interest, that you have to pay. And then term is the period where you have to pay it back. And often some banks these days, or a lot of them now, they don't match, the term doesn't really match up. So what they'll do is, they'll give you your rate, but then they'll say the term is for 15 years, which means that when you calculate this, at the end of 15 years, the loan will be totally paid off or totally amortized is what that says, what they say. But in essence, what they will bake into this is like in 5 years, even though you're paying, and acting like it was 15 years, at the end of 5 years, you are required to pay the unpaid balance. That's called a balloon payment. And why they do that is because they want to reset that interest rate over 5 years. So they don't want to lock themselves into what often could be a lower interest rate for 15 years. So they'll do these 5-year balloons like that. A line of credit is also very helpful for a small business. And often a bank will give you a term loan. Now this happens a lot with SBA lenders. And then on top of that, they will also give you a line of credit for working capital. Because a lot of banks know that when you, especially on a startup, you might go all in on this loan to get this business going or started. But on the day that you start, you're really cash poor because you've used all the cash from the loan and your personal cash to buy all the assets, with that loan. But often banks will give you like a line of credit that is basically a credit card without the plastic. And it is, credit that's available to you, and you just request from the bank and they will transfer some amount of money into your operating account. Generally, these are, a little bit higher interest rate, as credit cards often are. And then often they'll require it to have activity on it during the year. Like maybe sometimes they might require that you pay this down to zero sometime within a 12-month period of time. What they don't want to have happen, and this is not the purpose of this, is a line of credit, is that it goes up to the maximum limit and then it just stays there. The other feature of this line of credit is that, also like a credit card, you need to pay monthly interest payments on the balance that you draw down on, but you're not required every month to make a scheduled principal payment. So that's why that banks often want you to pay it down to zero at some point. They don't want it to be, maxed out and then just stays there when that money should have been a term loan anyway. So the other thing that I always recommend is you have to match up the type of money with its use. So if I was going to buy a building, I would want to use long-term money, like a regular loan that would be amortized over 15 years, because that's a long-term asset. But a line of credit is used for short-term assets, like things that will be, bought and turned into cash very quickly. So this is often used to buy inventory that you would sell, and then you would, pay what you made into the line of credit to pay it down, or doing some short-term things on, paying for expenses until your sales get ramped up to, that they can pay that all back. The SBA has quite a few loans. The SBA's whole mission here is to help businesses that are not entirely bankable, that a traditional bank would kind of pass on. And this has been their mission since the beginning. But the SBA does not make the loan. The SBA actually just guarantees the loan. But the institution that actually does all the loan stuff, it would be a bank or credit union, sometimes online lenders, and some of these CDFIs that we talked about earlier. SBA also, often, offers longer repayment terms. They have one that it's up to 25 years, has some strings attached to it, but it's, there's a bunch of them there. So let's go through these different types of SBA loans. There's the 7A loan program. This is the one that is probably used the most because it is the most flexible. And a lot of banks do these loans. They understand how to do that. And they can be used for a lot of things. They can also be used to fund short-term assets like working capital and inventory and things like that. But generally they're used for, like, if you're going to buy a business or start a business where you have to buy, equipment or things like that. So these are, just general purpose loans. You can borrow up to $5 million. That's the max that you can get on a 7A loan. The SBA is a self-funded program, so a lot of the fees and interest rates are tacked on the bank's fees. So sometimes the money's a little bit more expensive, which makes your payments a little bit higher. If you could just get a traditional loan, I would recommend doing that. But sometimes, there's a purpose for this. So if this fits your needs, then by all means. The 504 loan program is the one I was mentioning earlier, and it is a longer term, lower interest. It's basically a partnership with a traditional bank that loans a portion of the loan, and then the government actually, through bonds that it issues, will loan the other portion and has a lower interest rate, usually 10%. And these are all fixed rates. Sometimes you can go up to 25 years. So this is really a flexible program, but it can be used for certain things, and other things you can't use it for. So you can't really, it's primarily used for real estate purposes, buying real estate and fixed assets. That's generally what it's used for. The SBA also has a lot of microloan programs. So, one thing in a bank's eyes, it costs them, and it's just as hard to do a very small loan as it is to do a $5 million loan. So this is one way to incentivize, banks to do smaller loans. And most businesses, startups, don't need a ton of money. They might just need, $5 or $10 or $20,000. So these microloan programs are a great way to get started with some help from the SBA. So, with the pros of a loan, the good thing is, provides access to capital, helps you build credit. It's pretty flexible. Also, as opposed to an investor, you don't give up any ownership in your business. If you have an investor, they're a partner, they own part of the business. And if you have a hard time being an entrepreneur with the other people involved, this, loan might be the way to go. An investor, like I said, is a partner and an owner, so they have a say in things. And if they don't like the direction you're taking the company, so they have the right to dissent and say they don't like that. Some of the cons of a loan is, like, it comes with a cost. You have to pay interest on that. Sometimes your lender requirements are kind of tough. And then often, you might be required to have a personal guarantee, which means that you are required to pay it back. If you don't, then they have recourse against your personal assets. Crowdfunding is another great tool. A lot of our startup entrepreneurs use this a lot. Here's a couple that you can kind of look into. I know you've heard of Kickstarter and GoFundMe, so check that out. As I said, angel investors are, they provide capital for a business. They're somebody that has money to invest and they want to help small businesses and be parts of things. But generally, they are very interested in a big money return. I think the ratio for an angel investor is something like, they will lose all their money 12 to 15 times before they have one big success, which hopefully pays for all the other losses. So it's high risk, but they want high reward. Like I said earlier, they want your business to scale from 0 to 50, 100 million very, very quickly, and be able to sell that to somebody and cash out their investment. So how do you qualify for a business loan? And it really takes some preparation, and it is that's one thing we're really good at here at the SBDC is getting people ready for loans. We can't guarantee your success, but we can tell you to give you your best shot at it. We've done enough of these that we can really help. But you have to start with yourself. You have to be prepared for what's out there. You have to know your credit score. You have to have a plan. You have to have a business plan. You have to be able to provide financial statements if you're an existing business, and then use those financial statements to project the future. If you're a startup, you also have to have financial statements that more or less predict the future on what this business will do. You also have to have collateral, because if you're going to do a loan, almost always, they're going to require some sort of personal guarantee. So when you go to a lender, they use what we call the 5 C's of credit. And this is a framework they use to fairly, judge your credit worthiness and whether they're willing to give you a loan or not. Number 1 is character. And so this is why it's important to know your credit score. They're gonna pull your credit score anyway. So you can get a free credit report once a year from each of the. Well, I take that back. It's every 90 days you can get one. Let me back up again. So there's 3 credit agencies, and they are required by law to give you a free full credit report each year. You can also use these different online things, but those reports generally give you a score that won't really match a banker's score. They use directly from these 3 credit agencies. And so it's good to understand what's on your credit report, and before you even apply anywhere, if there's any questions about anything on there, or if there's some mistakes, get them taken care of. The weird thing about loans and credit is, like, if I was gonna buy a new car, I would visit 3 or 4 dealerships, and I would drive some cars, and I would talk to everybody, and because I'm a good consumer, and that's what good consumers do. We check out alternatives. It's almost the exact opposite for banking. If I was to apply for a loan at one bank, and then to be a good consumer, go to another bank and apply for another loan for the same loan, each time I apply, and each time the bank pulls my credit, it lowers my credit score. For some reason, it's some sort of flag that I'm hungry for credit and something must be going on in my life. So a way around this is, if you ask for your free credit report from those credit agencies, but only ask from one, you can do that like every 90 days or so, and that will get you through the year. So you have a pretty fresh credit score throughout the year from the credit agencies. And then you can take that and then use that to shop different banks. So you can go to a bank and say, I'm going to start this business and I need this much money. I want to apply for a loan from you. Here's my business plan with projections. And here's a fairly fresh credit report from this credit agency. And that should be enough for you to make a decision whether you want to go forward with me or not. And if I agree to do business with you, well, then you can pull your own, your fresh credit report then. But that way you're not dinging your credit by trying to get a better deal somewhere else. So that way, hopefully you can shop some banks around like that. So always know what's on your credit report. You don't want any surprises when you go to a bank. The next C is cash flow. I mean, your business has to generate enough cash to make those debt services obligations, make the debt payments each month and for years. And also to pay all your other expenses, and then plus has to pay you some sort of salary that you can live on. That's the thing. That's what your business plan. That's what your business plan should be able to prove that that this business will generate enough money to pay that. The third C is capital, and that is basically the amount of money that you're going to put in the deal. So a bank or a lender, and often even an investor, wants to know that they are not the only one that has money at risk, that you as the entrepreneur and founder also have things at risk. They don't want to be the only one that has skin in the game. So what are you going to bring to the table? Do you have cash? Do you have other assets that you can put in there? But you need to sort of have something. The fourth C is collateral, and collateral is basically just a secondary repayment source. It just says that if you don't meet your obligations for this loan, you can't pay it back. The bank has the right to look at your personal assets and see what it can seize and sell to recover what you owe. And that's just the basic idea, is a secondary repayment source. And then the fifth C is conditions. And there's kind of two pieces to this, I think. The first condition is pretty obvious, and are the conditions right in the world today, in the general economy, that this business would survive and thrive. So if things moving along, in the middle of the pandemic, even though some people did, it probably wasn't a good time to start a restaurant, especially when you were prohibited from having groups, and the government was closing the restaurants. That's just a kind of a vague example. So the economic conditions have to match your opportunity, or your perceived opportunity. The second part of the conditions, and this is my opinion here, is that your capital has to also have favorable conditions for your survival. So just on a basic level, if I was to wanted to open a restaurant, and I went to one bank and they said, yes, we'll lend you $100,000 at 5%, over 3 years. And then I go to another bank and they say, yeah, we'll lend you $100,000 at 3% over 15 years. The difference in those monthly payments are huge, because the shorter payment time means I have to pay more. And so that is a condition that might be hard on my business to cash flow. And if I hit a bump in the road, that can make me fail. Some businesses, these short-term loans, they don't bother because they generate a lot of cash. So just make sure that what you're doing matches up with what your business is going to generate. The good thing about Louisville is there are a ton of resources out there to help you find financing for your business. In addition to, just your local banker and things that there's, there's us, that's Louisville Urban League, Apex Accelerator, Human Relations Commission, the GFCS, the Jewish Family Career Services, Community Ventures, Elhome. These are all folks that are lenders that have money to, with the exception of Apex. and us, we don't have any money either. So, you know, the cool thing about Louisville is there's a lot of free resources, a lot of organizations that will help. And I would recommend that you take advantage of all of them things, everything that you can. So let's see. And Michaela's got a question. If you don't have any collateral, you can't get a loan, or you can get the loan but pay a higher interest rate. So that's a great question, Michaela. Yeah, often there are a bank or a lender sometimes will make you pay for risk if they see it's kind of risky because you have a lot of down payment money. Then they'll charge you higher interest rates because of the risk. If you don't have a lot of collateral, then that is what the SBA is for. That's what they do. They're kind of the collateral support because they do what's called this guarantee, which takes the requirement of collateral off. Because the bank will know that, like, if you default, then they know they'll be able to get their money from the SBA because they've guaranteed the loan. They said they will pay. That doesn't mean that the SBA will get you off, let you off scot-free. I mean, they'll still come after you and try to recover, but it's more likely that you will get funded through that. That's a great question. Any other questions? I don't see any. Okay. All right. Oh gosh, we are in the questions and answers page here. So, Cassandra says, I thought car lots do the same thing. Yeah, they may be able to. That was just using that as an example. So, yeah, but that's the idea. Yeah. So the big takeaway on getting funding for your business is the main recommendation that we give is that you really have to be prepared first. You have to really understand your business and have a good business model put together, have a business plan so that you can really, talk about your business. And there are just a ton of resources out there, and often it's like a jigsaw puzzle. If you need a bunch of money, then it might take 4 or 5 different sources where you put these different pieces together, to get the amount you need. And we can help you give you some recommendations on places to go for that if you want to hit us up. Again, we're at louisvillesmallbusiness.com, and just go to the top where it says Coach Connect, and then you'll see all of us. You can schedule a Zoom meeting with some of this. So, any other questions or comments out there? Oh wait, here's a question popped up over here. So Martha says, are there any minority business loans? Sometimes there are, not specifically through the SBA or a regular bank, but some organizations do have some, or they have programs that are specifically tailored for that. So I would check with the Urban League or RTBI, the Russell Technology Business Accelerator or Incubator. Sometimes they do that. So just Google those organizations and hit them up and see what they got going on. Okay, let's see. Okay, well, thank you. I appreciate that. It was nice of you to say that. Okay, anything else, you guys? Any words of wisdom for me out there? Let's see, Michaela said, I've been working on getting my business going for a while. She creates handmade items. Yeah. Well, I would just say, Michaela, that if you have the resources to create some inventory, then figure out ways to sell that inventory right away. You know, the rule of thumb that I have is like, you know, have the mindset of starting, you know, start before you're ready. You know, don't have the mindset where I can't start because I don't have this chunk of money to do these things where I have a nice storefront and all this other stuff. Just look at what you have, figure out ways that you can make a dollar today with what you have today. And, you know, by getting this kind of traction, just selling things as you get them and moving forward, you're actually building, you know, buzz, you're building a business. And yeah, okay, Michaela, I knew you were going to say that. So, you know, you got the inventory, just not the funding and marketing. So you have inventory, which means you can sell something. So can you sell to your friends, or can you go to different you know, farmers market things, or churches, or can you set up a free website? Anything that you can do to you know, to sell stuff. You know, what can you do with what you have today, which you have inventory? What can you do to sell that inventory today without being stonewalled by some sort of lack of funding? Yeah, so, you know, I think that if you just put your thinking hat on, you come up with some different ways to do that. And just think of it as an experiment that, you know, I'm going to try to sell a few things this way. And, you know, maybe this works, maybe it doesn't. If it doesn't work, I've learned from that. If it does work, then I'm going to do more of that. So just kind of think through that. So, yeah, pass out business cards. There you go. Good. Yeah. Nobody said that entrepreneurship was going to be easy. And generally, I've found that, you know, once you're in business, the amount of bad things that happen just increases exponentially. That's just the way it works. You just have to be tough, be persistent, and keep on going. You know, do exactly what you said there. Just focus on what works and try to sell whatever you have to sell, and do it every day. Cassandra says, mention your business to all your friends or people you come into contact with. That's true. That is true. Yeah. Always be selling. Always be selling. Be persistent. Don't get discouraged, because, you know, it is so easy to get discouraged. The world seems so big. When you start a business, you need to sell stuff, and no one pays any attention to you anymore. Yeah. The big test is that if you can get somebody, a total stranger, to buy something from you, then you have something of value, because you can always get your mom to buy stuff from you, but if you get a stranger to walk up and give you money, that's my test of success. So hang in there, Michaela. You're gonna do it. Don't give up. All right. Yeah, you'll have a streak where things are going great, and then they won't for a while. Yeah. Again, like I said, when you go into business, the amount of challenges and bad things that happen to you just increase. It's just the way the universe works, but keep on going. But it's always kind of to do like a little look back, you know, when things are going great. Just be mindful of what you're doing and what seems to be working, and just focus on what really works and do a lot of that. Sandra, you're doing great. You give out samples for free. That's true. Yeah. Yep. Always be selling. Yeah. All right. Okay. Okay, everybody. Well, thank you guys so much for listening to me and joining us today. It's been great. And I really appreciate you guys sharing. Cassandra, Kayla, just kind of open yourself up to everybody. That was nice. I appreciate that. And join us next week. We'll be back here. What do we got going on next week?
Nope, we're taking a break. Next week is Derby week,
Oh, that's
so
right. It's Derby week. Yeah, for
we'll
you.
be out.
For you
Join us
folks.
in 2 weeks. We'll have a very special guest talking to us about hiring great people for your business. So you won't want to miss Ann Shado coming back to join us for that event.
Yep. Yeah. So yeah, do that. So for you folks in California, since you're the furthest person away, things go crazy here in Louisville during Derby week. So it is Christmas in May. So come visit us sometime. It's
Yeah.
crazy. Let's see. Lisa says you need to set a date with a business coach. LouisvilleSmallBusiness.com. Write that down. Just go to the website. Look at the top. There's a little tab that says Coach Connect. Click on that. You will be able to quickly see our calendars. Pick somebody else you like. There's 4 of us, 5 of us, and you know, some of us will have time sooner than others. So just jump on there.
And hats off to this week and next week to all the small businesses because most of them will be involved with all the events that are going on in one way or another.
Right. Yeah.
They'll be working hard over the next couple of weeks. So hats off to all you folks.
Great. All right, everybody. Thanks for joining. Happy Tuesday. We'll see you in a couple of weeks. So have a good one. Bye-bye.